Hello, everyone. Can you hear me? My name is Hannah, and as Dustin mentioned, I'm with Eventide Asset Management, and it's a privilege to be with you all today here in Denver. And before I begin, I'll share a little bit about my background. So I didn't always wear a blazer and work in a high-rise. I actually grew up in West Africa in a country called Mauritania. And my parents were missionaries there running a relief and development organization. So I grew up in a one-room house with chickens and donkeys running in and out, and a tin roof that leaked when it rained, and living with neighbors who lived on less than $1 a day. So it looked a little bit different than this room does today. And so you might be asking, how did the daughter of missionaries end up in the finance industry? And are you really following their footsteps? And the answer is yes. And part of what I love about the Denver Institute is this connection between living missionally wherever we work. That regardless of whether we're in the finance industry or we're somewhere overseas, that our faith is driving how we act each day in our workplace. And we believe that that extends not only to how we interact with our employees or with our colleagues, but also with how we invest our money, how we steward the money that God has given us. So I'm going to share a little bit today about what that means and touching back on that idea of investing as ownership or investing as stewardship, as was just introduced. So we have this fundamental relationship between shareholders and a company. So shareholders are supplying capital to that company, and then in return, they're earning not only the rights to profit and growth, but also an ethical responsibility to the impact that that company has. So as we think about investing, many of us don't have the qualifications or the experience to do private investing or real estate investing or venture capital investing. Most of us, our first encounter with investing is through our 401k. And I know for me, when I started my first job, I set up my 401k, and it was much like choosing a health plan or deciding where you wanted your desk to be. It just seemed like part of the onboarding process. So how many of you in this room have a retirement fund or 401k you're invested in? Raise your hand. Okay, almost everybody. Now, how many of you can name a company in your 401k? Okay, pretty good. That looked like maybe 30 or 40%. Great. So there's this idea of not only investing as ownership, but actually knowing what it is that we own. So to ask a different question, how many of you know where the steak, or maybe the green beans if you're a vegetarian, that you ate for lunch today, where it came from? Okay, nobody. I also do not know. Now, as we think about food today, and we think about the Green Revolution, the ability to produce food in mass quantities has led to tremendous benefits, and entire economies have developed because of this ability. But as this scaling has happened, there's increasing complexity. There's increasing middlemen and systems that are between you and the food that you're eating. The same principle applies to the investment industry. As the investment industry has scaled and grown, enabling far more people to have access to investing, that's come with tremendous benefits. It means that capital can be allocated to the best and the most productive activities that humankind can come up with. But it also comes with unintended consequences. It means that as end consumers, we are farther and farther away from the product that we're actually consuming. And that's why many of us don't actually know what we own. And I, for one, did not know what I owned when I first set up that 401k. So what are the implications of this for us as we think about the public markets, which is how most of us are having our first encounter with investing? Now, with this increasing complexity, with this distance, what that means is that we could actually be owning companies that are harming society. We could even be owning companies that are harming the very causes or groups that we care most about. So you could own a company that is a tobacco company, for example. The top 10 mutual funds, retirement funds that you can invest in today have tobacco companies within their portfolios, have weaponry companies within their portfolios. And so maybe you've had somebody close to you who's been affected by addiction, And you could even be passionate about fighting that topic, and little do you know it that your dollars, your retirement money, is actually going to fund these companies. That's obviously a situation that none of us want to be in. So why is this happening? How do we solve for this? Well, really what's happening is that it's easy to invest in a portfolio through an investment manager that is then depending on a portfolio manager to select these companies without ever knowing where they're coming from. And companies and management teams at companies are managing to the expectations, to the demands and requirements of shareholders. And historically, what that's looked like in the American economy is managing to profit. Profit at any cost. But what if there were a different approach to those shareholder demands and requirements? What if there were a different vision, a different voice that we're saying, we're not just looking for profit at any cost. We want to understand the path to profit. What are the stakeholders that you're impacting along the way? How are you actually creating value for humanity? Now, Eventide is that different voice in the public market saying, we believe business is called to create products and services that serve humanity, that serve humanity's greatest needs, and that are flourishing, that are creating profit, that are outperforming by meeting those essential needs. So to give you one example, the S&P 500 a decade ago, 1 in 5 S&P 500 companies reported on sustainability. Now, a decade later, that's 4 in 5 companies that are reporting on sustainability. And the reason for that is shareholder demand. But we don't want to just see companies change their reporting practices. We want to see them changing their actual behaviors. And we have the power to do that as owners, as shareholders. So how can we be that voice? How can we be that different vision for what a company, what a management team is expected to do? There's nearly $20 trillion in mutual funds. And if you expand that to ETFs, it gets massively larger. So there's a huge opportunity here for capital to be allocated and driven based on a different set of demands, a different voice in the market. And really, when we talk about companies, when we talk about businesses, we have to talk about management teams because they are the driving force behind these businesses that are determining how they're being run ethically or unethically. Oh. All right. So let's consider who are the other stakeholders that should be considered beyond just shareholders. And at Eventide, we look at 6 key stakeholders: customers, employees, suppliers, communities, the environment. And we believe that there's an underappreciated value in considering stakeholders. So this man on the slide is Edward Freeman. He's a professor at UVA Business School, and he's often credited as the creator of stakeholder management theory. And he says, business ethics shouldn't be an oxymoron. It should be 2 words that are redundant to each other. Thinking about stakeholders is thinking about business, and thinking about stakeholders is thinking about ethics. It comes to the same thing. So this is not about, can we just be do-gooders? Can we think about stakeholders because it's the right thing to do? We believe at Eventide it's not only the right thing to do, it's the smart thing to do. This is an underappreciated source of value and source of economic success over the long term. So for a moment with me, let's consider, what does that look like? What is that 2-way relationship between stakeholders and the business? And first, let's look at the negative, and then we'll look at the positive. So when a business neglects its customers and doesn't care for them, they go out and tell friends and family to avoid that company and stay away at all costs. When they don't care for their employees, when they just treat them as exchangeable, then employees neglect their work and may even quit. When businesses don't treat their suppliers in a humane manner, suppliers and their workers will give the worst of their products and services to that business. When a business doesn't consider the communities that it is based out of, those communities go on to condemn the business to others around it. And when a business doesn't care for the environment, not only does the environment not sustain that business, but it may even lead to litigation or environmental catastrophe. And lastly, when a business doesn't consider society and even harm society with its products and services, eventually society will go on to condemn that business. Now, we can all think of businesses, tobacco companies, etc., that are doing quite well with exploitative and addictive products and services. But ultimately, is that something we want to be a part of? Do we want to be profiting from others' addiction, profiting from exploitation, profiting from value extraction? Now, when a business cares for its customers and serves them well, those customers go on to spread the message about how great their product or service is. We can all think of an awesome restaurant that we went to, or our favorite pair of shoes, where we couldn't wait to go tell all of our friends and family, you have to go out and buy these sneakers, you have to try this new restaurant. As for employees, when a business invests in employees as long-term human capital, then employees invest back into the company and give their best creative work. When it cares for suppliers, suppliers are incentivized to give their best work and services to the business. When it cares for communities, then communities go on to promote the business and allow it to flourish. When it cares for the environment not only sustains the business's productive yield as it grows, but allows for other businesses to spring up around it. And finally, when the products and services serve society and truly create value, society grows the addressable market for that business, allowing it to scale. So we can see here that considering stakeholders and stakeholder impact is not just about doing the right thing. It's about understanding and having differentiated insight into long-term business success and how the impact that stakeholders are having back on the company will allow it to flourish and then return those profits to shareholders. So coming back to these 3 dimensions of faith-driven investing that were touched on in the first talk, avoid, embrace, engage, how do we actually practically do this? We understand these philosophical ideas, okay, we need to care about stakeholders, but when you get down to brass tacks, how does this impact the way that we manage our portfolios? So the first step is avoid, and this looks like creating an investable universe that passes our screens, which are grounded in our values. So this is that doing no harm piece. We want to ensure that nothing we're invested in is profiting from extractive or exploitative activities. At Eventide, we do that through an in-house custom software platform called Edify, and we rely on both external vendor data from a number of sources as well as our own in-house criteria and research in order to have a multi-vendor and mosaic understanding of how companies are profiting and how their products and services are impacting stakeholders. And just to give you a quick view into Edify, it has over 15.6 million unique data points, over 35,000 custom lines of code, and you can read the other statistics on the screen, but we have invested a lot of time, a lot of man hours, a lot of system hours in getting this right and ensuring that we're looking at this investable universe of public companies, a universe like the Russell 3000, for example, and understanding from multiple different perspectives how companies are profiting. All right, now we come to embrace, and this is the exciting part for us. We know we don't want to do any harm, but we don't want to stop there. We don't want to just own companies that aren't harming people. We want to own companies that are actually creating value, that inspire us, that we can be proud to talk about. And that looks like finding the highest quality companies that contribute to both human flourishing and value creation for all stakeholders. And the way we do that is looking at this intersection of secular growth themes and themes of human flourishing. And this is why at Eventide we talk about performance and a better world. We're not just looking for that human flourishing piece, but we're looking at companies who are running lean operations, who are well managed, who have excellent strategy, and who we see will be profitable in the long run because they're building their success, they're building their profitability off the value that they are creating for their customers and for all stakeholders. And some examples of this are Transportation 2.0, orphan and rare diseases, immunology. These are areas in biotech and technology, for example, where we're focused on finding the best companies that are outperforming their peers in creating innovative technologies that are serving society. Lastly, engage. So as long-term owners of these companies, we have a unique opportunity to engage and partner in conversation with them. And there's a few different ways that we do that. So the first is close partnerships with management teams. Management teams respect us because they know that we're not just buying in and buying out overnight, that we're in it for the long haul and we're partnering with them to see them succeed. And so we constantly have management teams coming through our office. We have one of our analysts has over 400 meetings a year with management teams, so that's over 2 meetings a day if you look at it over working days, where he's meeting with teams to understand how is the business run, and he's sharing our own values and the key elements of success that we've seen in the companies we've partnered with. Second is active involvement in proxy voting. So proxy voting, for those who aren't familiar, is an opportunity to vote on different topics like board compensation or economic proposals, shareholder proposals that define how a company is run. And a lot of companies have this on autopilot, but we take a really active hand in ensuring that how companies are developing their policies is in line with our Business 360 values. And then lastly, advocacy and dialogue on key issues. So we do not take an activist investor stance, which would be, for example, buying a company that's already problematic in the hopes that we can change their minds and turn them around. This is taking companies that we already see as Business 360, so they've already passed the avoid piece. We've already embraced them because we see them creating positive value, and it's working with them to help them reach their full potential. Or maybe if there's a misstep along the way as they're scaling, as they're growing, we're partnering with them to help them reorient back to those values. So all of this we ran through really quickly. It only skims the surface of the research that our team is doing, and it can seem complex, but ultimately you can come back to some key questions that you can answer in your gut about stakeholders and about Business 360. So for a management team, if you look at a business that you're invested in, if you look at a company that you own in your 401k, for example, would you want to work under their leadership team? Would you recommend their product or service to a friend? Would you want your son or daughter to work at this company? How much value does this product bring to humankind? If you think about a scale of 1 to 10, where 1 is chewing gum and 10 is curing cancer, where would you rate this company? What would your reaction be if they opened an office in your neighborhood or your community? What if they opened a supply center or a factory in your backyard? If you were taking your grandmother on a tour of that factory, would you be proud to show her the working conditions, or would you say, oh, don't look over in that corner, that's where the bad stuff happens, refocus over here? And lastly, does this company leave a better planet for our grandchildren? If we can truly answer these questions in our gut, yes, then we know that this is a Business 360 company. And this is what we call investing that makes the world rejoice. It's the opportunity to invest in a way that creates joy for society. And this concept of faith in work often touches on building a legacy in a way that is grounded in our Christian values. And all of us want to leave our children with more than what we started with, leave our grandchildren with a legacy that will allow them to go on and flourish. And we want to do it out of work that is responsible, out of work that's aligned with our faith values. And that's that stewardship piece that we touched on earlier. And in addition to that legacy, we also want to have an opportunity for generosity. We want to manage our money and live our lives in such a way that we can give to the causes that we care about. But what if in addition to that stewardship, that legacy for our grandchildren, in addition to that generosity piece, we also brought it full circle to that investing piece, to ownership, where we could actually create that future, create that legacy for our grandchildren by investing in companies that we can be proud to talk about, where we can say to our grandchildren, I created this legacy for you, I'm handing this on to you, and it was built on the backs of businesses that created value for society, where not only am I caring for you, my grandchild, but I actually created this wealth by investing in disease-curing technology that allowed kids with orphan diseases to live and see that future as well. Now that is wholeness in our management and stewardship of what God has given us, that we can truly say we're stewarding those resources in a way that reflects our faith and allows us to live that out in every aspect of our lives. Thank you.